All right, from wireless, we turn now to Walmart. The shares of the discount chain were up on a day when one report said that U.S. retail sales jumped more than 3.5% last week compared with the same period last year. This even with, of course, the big East Coast snowstorms. Well, my next guest likes the shares of Walmart. He thinks that it's a bargain stock right now. We're joined now by a renowned value investor. We have Charles DeVoe. He's a portfolio manager for International Value Advisers. Charles manages nearly $6 billion in the IVA Worldwide Fund. Charles, good to have you with us on Bloomberg.
Thank you. Good afternoon.
You like the shares of Walmart right now?
We love it.
Why do you love the shares of Walmart? Consumer staples? I thought people are going for growth stocks right now.
Pimm, it's about the price. It's about valuation. That stock has gone nowhere for 10 years, yet earnings per share have more than tripled. And so now the company trades at a very modest multiple of earnings. They have a solid balance sheet. They own a lot of their stores, the locations in America. They're doing good things internationally, and they offer items that are, pretty cheap for customers.
What do you think of Motorola's strategy to add smaller footprint stores, going into more urban areas with smaller square footage? They're used to those big warehouse type stores. Do you think that's going to work?
I plead ignorance. I don't know, Pimm.
You don't know. You just look at the valuation of the stock and that's it.
Well, in the case of Walmart, no, I think that they have great bargaining power. They can buy things a lot cheaper than most. They can, as a result, sell goods at a low price. And again, the fact that they own so many of their stores is a huge competitive advantage.
Take a look at what Walmart is doing in Mexico. Do you like their operations there? Because there is a publicly traded separate entity, Walmart de Mexico.
Yes, they're doing extremely well in Mexico, have been doing well for many years.
And you talk about how the stock has done nothing for, what, the last
10 years?
10 years?
Yes.
What gives you the impression that something's going to happen, let's say, in the next 10?
Because if I think as the company's free cash flows gets generated, the company will be able to increase its dividend, or if the stock remains too cheap, the company can buy back its own shares. And the more they buy back themselves at a discount, the more accretive it is long term.
Charles, speak a little bit about Japan, because one of the companies you've been focused on is a company that provides security not only to residences but also to businesses. Tell me about Japan and security in Seiko.
Well, Japan, Pimm, is a market that has been in a bear market for 20 years. And so that's music to the ear of any value investor. It's been going down and down for so many years. And that company you talked about, Seiko, does electronic security, like an ADT. In fact, most of the business is business, commercial, as opposed to residential. They have a dominant market share, and they just generate a huge amount of free cash flow year after year. In the past, they diversified. In other words, they made foolish acquisitions, but they seem to have learned their lessons, and they are doing smarter things with their money. They're paying a decent dividend. The dividend yield is respectable. And the next step for them would be to start buying back their own shares.
Now, it seems as though a combination of investments in Walmart and Seiko sounds very cautious right now. Are you cautious?
Yes, we are cautious. There are still many problems in the world. The private sector is deleveraging, but that's offset by increased debt incurred by governments. I think there are a lot of question marks that maybe will be partially resolved this year. China, can the Chinese economy engineer a soft landing, or will it turn into a recession? Europe, will companies or countries default this year, and how is that taken by the market? And in the U.S., how high can interest rates go? We've seen the 10-year treasuries go down a lot in price. The yield has gone up a lot. If that trend were to continue, that could create havoc both with the economy and with stocks and bonds.
So do you see that there is a tension between a cyclical recovery out of a recession and that natural preponderance of stocks to increase in value, but that tension exists against the structural backdrop as you're just describing, whether it be in Europe or in the United States?
Absolutely. And you may remember 1994, the economy had started to recover nicely, but then that was accompanied by a rise in interest rates, and that was not taken too well by both the bond market and the equity markets.
Talk a little bit about the energy sector, because I know another company that you're focused on right now, Total, the French integrated oil giant. Oil prices coming down below $90 a barrel today. Why do you like Total? Valuation, once again?
Yes, valuation. Based on our numbers, the stock price of Total is only pricing in WTI, the price of oil of $65 a barrel. So even if the price of oil were to come back down to $70, $75, $80 from its current level, we think that the company is, the stock is cheap enough to address, if that were to happen. We also like the fact that it seems that there are a lot of natural gas discoveries around the world, and yet it seems harder to discover oil. So there's a scarcity value that's increasing in favor of oil at the expense of natural gas.
Now, you seem to bring up something that I remember reading in Graham Dodd, the security analysis, which is that when you make a purchase, when you buy shares, you want to make sure that you're buying them at enough of a discount in order to, in a sense, cover yourself if things really do turn out badly that you don't have any control over.
Yes, Ben Cram called that discount between the price and the value the margin of safety. Price is what you pay, value is what you get. And if your assessment of the value is wrong, in other words, if the price of oil were to go down, which we're not necessarily expecting, we would be protecting, because we're buying something that is only reflecting an oil price of $65 as opposed to $90 or $95.
Another stock I know you follow, Vivendi. Tell me what's happening with Vivendi, and is that also a situation resulting from European concerns? People are looking at where the company is based in France and saying, I don't want to own it. You're looking at the assets.
Exactly. We like the assets, mostly telecommunications assets. They also own a stake in Activision Blizzard, which makes electronic games. We like the fact that they distribute the bulk of their free cash flow, so the dividend yield is very high. But at the same time, we worry about Europe and the euro, so we are heavily hedged. We have heavily hedged the currency. But still, we think that that specific stock, at its current price, remains extremely attractive.
Explain a little bit more about hedging the euro versus what, the US dollar?
The dollar, yes.
What's happening?
Well, our clients are US dollar-based. And so if the euro were to go down, if the euro were to decline 20 or 30%, we have protected ourselves against that happening by selling forward the euro against the dollar.
Do you think that that's likely?
It is a distinct possibility, yes, that the euro may go down because of all the problems associated with some of the countries in the southern Europe.
In southern Europe, you don't think that we're anywhere near over when it comes to European sovereign debt issues?
No. In fact, if anything, a restructuring of some debt is extremely likely this year. Some countries and companies are likely to default this year in Europe.
Tell me what you've been doing about gold right now. I'll give you about 10 seconds. Have you been selling?
Yes, we've been reducing our gold to around 4.5%. Because the price has moved up so much last year, the year before, so we're just trimming our position tactically.
All right. I want to thank you very much, Charles DeVoe, coming to us from International Advisors. Thank you, investment advisors, value investor. Well done.